Welcome back. You're still tuned into Commodity Central, and big boost coming in for commodities derivatives as SEBI chairperson just said that FPIs can now trade in non-cash settled, non-agri contracts. First up, let's go across and listen into what the SEBI chairperson had to say, and then we have an exclusive interaction lined up on that.
A proposal to allow FPIs to trade in non-cash settled, non-agricultural commodity derivative contracts is also currently under examination. We will also engage with the government to consider banks, insurance companies, and pension funds to trade in these markets. By December 2025 end, we will include commodity-specific brokers in the Samohik Prativedan Manch, a common reporting mechanism for compliance reports. This will ease their compliance requirements. We have engaged and will continue to engage with the government to resolve GST-related challenges for participants who wish to receive or deliver commodities through the exchange platform.
That's the word coming in from SEBI chairman. But to discuss this in greater detail, we are now joined by Abhishek Govilkar, head Agribusiness at Big Mint. Abhishek, afternoon, and thank you so much for taking your time out and joining us here on ET Now. And as you just heard SEBI chairperson talking about FPIs now being allowed to trade in non-cash settled, non-agri commodities. What does this mean for agri and the commodity market at large? And do you expect volumes for commodity futures to rise on account of this?
Hi, good afternoon. I think this was a long pending demand from the commodity market participant. There was consistent efforts done by the exchange as well as various stakeholders. Participation of FPIs in deliverable contracts also. So I think this is a very welcome move, and I think this is going to help bring a larger set of liquidity as well as more stability in the contracts. I think that is going to help the overall ecosystem in much more wider way through increase in overall liquidity as well as increase in participation for deliverable non-agri contracts like base metal as well as in bullions.
So volumes are expected to rise and perhaps participation is also expected to increase going forward. But Abhishek, within this, which categories do you expect most traction in? Could it be precious metals? Could it be industrial metals or some other commodity?
I think in the non-agri space, I think bullion is already having a very decent liquidity on the exchange platform. I think that will be the first which will get the traction from FPIs. Apart from that, the base metals also could be the potential because base metal in India are again backed by physical deliveries. So those contracts can also see a good participation from FPI in terms of their active participation as well as bringing more liquidity to those contracts.
Understood. And SEBI chief also said that he will engage with government to allow banks, pension and insurance funds to trade in this market. How do you interpret this statement, and what kind of impact will that have on overall volumes and the kind of participation that we are seeing in the market currently?
I think this the participation from banks as well as pension funds could be a game changer for Indian commodity markets, as it can substantially increase the participation from those players which are going to provide depth, liquidity as well as efficiency to the market. These players normally put their position on long-term basis. So I think the overall depth in the par month contract as well as overall say participation in terms of long-term position as well as helping their clients with long-term sophisticated trading strategies could be something which can help the commodity participant, and banks can further sell the commodity derivatives to their client in order to hedge as well as manage their price risk for the exposure they have for the underlying say commodities in Indian markets.
And do you expect that FPIs will for real come and trade in Indian commodities? I mean, I understand the regulators are giving the leeway to do that, but do you expect realistically for FPIs to come and trade in Indian commodities?
Yeah, India is a very vibrant as well as big market in terms of the overall volumes as well as the overall physical market for all the commodities which are listed. So in that sense, definitely India will be on the radar of FPIs when the gates are open to allow them to trade. And also, I think their participation will largely depend on the overall regulatory clarity as well as consistency, because many times we have seen that there has been challenges on that side. So I think if there is a consistency in terms of the policy as well as giving them a proper uniform platform to participate, I think that will definitely attract their participation as well as their volumes on Indian commodity exchanges.
Understood. So that's an important update that has come in, and volume and participation perhaps is expected to rise. Abhishek, thank you so much for taking your time out and joining us here and helping us understand what the statement from SEBI chairperson actually means, and that volumes perhaps could rise going forward. But that's all the time we have on this edition of the show. Thanks so much for tuning in. More news and updates will continue on the other side.